Hey everyone, this is Patrick from EasyFX Code Trading System, and it's Saturday, the 6th of November, 2021, and this is the weekly technical analysis for spot gold and dollar yen for the second week of November. And as you can see on both charts, they are both inversely correlated, where spot gold is trying to move up in a upward bullish channel, while dollar yen has been struggling and drifting down in a downward trending bearish channel now. So let's begin with spot gold, where it had a very strong bullish close on Friday yesterday after the non-farm payroll report. Even though the US jobs data was much better than expected, not slightly better than expected. Market was hoping for much more, but it was 531,000 jobs versus 455 expected, so it was still quite reasonable. After initial dip lower for spot gold against the US dollar. Let's go to the 4-hour time frame here. This was the dip after the news, and it found support right at the lower channel trend line, and as well as some confluence with the 55 period EMA and the weekly pivot as well. It bounced from there and then continued higher for throughout the night till right to the close. Right, so that was a very strong reversal move. And you can actually take the reversal fib here, and when past the 138, it was targeting the 162 fib extension at 1819 plus. Didn't quite get there yet, so it could just spike through that on at the open on Monday before a retrace lower. Let's move back to the daily time frame, and that was Friday. After the non-farm payroll, it broke through this 78.6 resistance at 1809, basically 1810. And looks like for next week, it could be trying to target the retest of these multiple tops here over the last couple of months, since July actually. So this resistance now, it should be an interim support. This was this level here at a 50 pip. I think we can remove that one, because the more significant one was here, where it bounced off this support zone, confluence of the two fibs. The shorter one in green was at the 38 fib retracement. Actually, it's the 62 fib retracement of this move, or you can look at it the other way, was the 38 fib retracement of the move down. Right, the bigger fib in blue was at the 21 fib retracement. Let's just mind where we were. This is the long range fib here, from the all-time high to the lows of early this year, and started to go back higher. and trying to target the 38 fib retracement area now, confluence with this zone. So let's mark this as a key target area for next week, right at the upper channel trend line as well. So that's at the 1830s area from 1829 to 1834. Okay. So also move this out for the 1750. Is out for now. So the new monthly pivot for this month is at 1780.88. And it has closed last week at 1817, almost 1818. All right, so this could likely continue to test this zone. Now, it'll be interesting to see whether it's able to break it this time after multiple attempts, at least 4 times. So it could continue further. On the downside, there should be very strong support from the 1800 level, right? Well above the daily 200 EMA. It should not get down that far. So the 78.6 fib retracement is at the 1810, so that should provide some intermediate support. Okay, we shall also take a look at the US dollar index. And this coming after last week's massive amount of news, this week is relatively light with just CPI news coming up on Wednesday. And then before the NFP, there was the Wednesday afternoon FOMC rate and policy decisions, and the tapering was announced and expected, and it did cause the US dollar, gave a US dollar a slight boost, and did cause the other major pairs to dip lower. And that was the dip into this zone. That was the Wednesday afternoon. But then managed to bounce off it and then continued to recover on the Thursday. And the Federal Reserve did try to separate the tapering and the interest rate hike. So calling it a separate issue and focus on tapering first, and it will start this month. And interest rate will depend on number of other factors that they're looking at, and it will be likely in the last quarter of next year. Okay, so from the start of the week, it was blocked by the daily 200 EMA, and finally broke out higher through that. So that's why that's another key support level, just below the 1800. Okay, so let's take a look at the US dollar index. Where it did attempt to, that was the Friday after the non-farm payroll data, it did try to break out higher, but it was blocked in this resistance zone where it has been a major stumbling block for a while now. and then was rejected and then closed bearish for the day. So that's the second attempt now, or almost the third attempt. If we take a look at the weekly time frame, that was the previous attempt back in September of last year. September last year, where it attempted to break out above that level, but then started the turn down and turn bearish from then. And only recently has been attempting to break back above that swing high, the swing high area. Let's go back to the daily time frame. So it's important for the US dollar to still stay within this consolidation range with the resistance zone around the 94.50 area. And then the support at the 93.80 area. So if it remains within that zone, then there's still opportunity for it to attempt to break out higher. But for now, it's still stuck below that resistance zone. So let's also take a look at the 4-hour time frame. The US dollar was attempting to climb up higher after the FOMC. Initially, it dipped lower, but then it turned around and reversed and gained traction heading into the non-farm payroll, the jobs data on Friday, and unfortunately, it was not able to break above that resistance zone. All right, so let's move over to dollar yen. And dollar yen has been attempting to stay above the 114, but then fell on the Thursday and then followed through on the Friday, but still managed to remain in a fairly tight range, about a 100 pip range for the week. So it could not remain above the 114 and heading back towards the monthly pivot level now. This new month's monthly pivot is at 113.17. And it could be attempting to target the 113 and perhaps slightly below. If it does head down to the 68 fib, which is actually the 38 fib retracement, that should be support there. So let's mark this as the support at the 112.50 to 60 zone. For now, we'll just leave this one here as next major support. And for now, 114 is still a intermediate resistance. So we can also mark that as a resistance zone. All right. So not too much news this coming week. So only the CPI on Wednesday, and then the preliminary University of Michigan consumer sentiment on Friday. So those will be the news trigger for the US dollar. And conversely for the other major pairs. All right, so after the initial blast of news last week, we'll see whether it has settled down and start moving in their respective directions. We'll see the the weekly close for the dollar yen has been it's been a narrow range for the last 3 weeks, and it did dip lower, close lower for the week. So that's bearish momentum could continue into that 38-fib retracement. And likewise on the weekly time frame for spot gold, that was a very strong bullish move, and it's targeting that resistance zone at the 1830s area. Okay, and if it does break through higher, then the next key resistance will be the 1850. Right? Okay, so do check out my other videos on the other major pairs. Have a good trading week, have a safe week, and cheers for now.